All right. Well, I made this macro, but specifically multifamily and macro econ market analysis dashboard terminal tool fun project I made over the weekend. And I made this in with Claude as well as Cursor, and wanted to show it to everybody, just showing what we're doing. This is also built out now as an Excel plugin, and I'm working on the Excel integration of where we can just pass a deal right through it, and it'll pull data in and out between this terminal and Excel. But let me show you how it starts. So again, inspiration kind of like a 80s, just terminal on Wall Street. So you're gonna come in, log in, loads all. So this is full of live data feeds and APIs from everything from BLS, Census, Fred, a lot of live market data feeds. It's also loaded with a bunch of CoStar data, and mostly Midwest CoStar data. It's not like national. Like this is really just like built for like me and my team. A lot of heads up. As soon as you open it up, it will do like a search, and it will basically do a little bit of like a macro update, but specifically related to multifamily. It has like a personality called the operator. Has a lot of just terminal commands for specific queries. And again, it's loaded with just information, a lot of that just tailored to Great Capital. So it understands our investment thesis, our acquisition strategy, our investors, all that stuff. And so it can pull news, macro information, and say what's relevant to us. And so here, obviously, we're talking about the Iranian war, highlighting the major jobs report that came out today, 92,000 jobs lost in February, warning sign for the economy. What does it say? Energy prices spike, hit workforce housing tenants hardest, and could keep the Fed from cutting as aggressively as the market expects, maintaining pressure on financing costs. Yep, makes sense. And so, like, if we want to do a deep dive, I can click on this like employment button, and this is going to pull from latest employment numbers from wherever we can find them. Again, we have just direct APIs to BLS, Census, Fred, and a lot more sources. Over here on the right, again, we have like a Fred dashboard, Fed funds, unemployment, current yield curve. All right, so immediately goes into the jobs report. Long-term unemployment jumped to 1.9 million. Again, so I have a lot of indicators down here. I've set some tickers, some REITs, mortgage rates, SOFR, 10-year, 2-year. Also have a map feature, so if I want to like do some like market analysis on a zip code, like I can type in 46032, so that's like Carmel. They're calling Indianapolis. Immediately pull in some information, pulls up a chart. Actually, it's going to be pulling in specific comps, looks like. This data will have to be updated. This is like recent CoStar data. We're working on building a database. See, it's a little buggy right now. Let me see if these layers work. I'm not sure if they do or not. So I do have like FBI crime data feeding in. I have to keep working them. Yeah, we got distance to, that's the center of the zip code, I guess. This is comp score. Again, you can. Another thing this does is it does a pretty good job of like loading a deal in and doing deal analysis. I built in like an Excel parser and Excel calculator, and it doesn't do a good job. It doesn't work that well. That's why I'm working on the Excel integration of where this thing doesn't have to do any math. Just Excel does the math. So I figured, why am I trying to recreate Excel? But having this inside of Excel would be a nice analysis tool, especially if you could take like this charts and the demographic and the research, and you could even just like drop it right into Excel itself. And so like what also I can do now, I can do some like Monte Carlo analysis. Built a Monte Carlo statistical engine into this. So this is just doing, okay. This is pulling like the multifamily information. I think I need to tell it to do Monte Carlo. So let's see what it can do. So it did give us, I just gave it the macro Monte Carlo prompt, and so that immediately just gives us like this valuation spread, rent growth distribution, like national rent growth distribution spread. Again, this is doing like 10,000 different calculations and taking different forecasts into account. And so as we just continue to maintain like updated reports, this will update as well. I thought these Braille graphs were cool, so I added those. Okay, so unemployment rate forecast. So it ran 3,000 correlated scenarios through the year end 2026. I mean, it has unemployment going down. Impact on unemployment rate, Fed policy response, biggest factor, AI productivity impact, immigration policy, trade tariff impact. Those are all the different weights. Back to the charts. See, it will automatically pull these charts all over there on the right side of the terminal. Another thing I built in just from just having fun. I have a lot of different kind of user interface options. So this is what they call the institutional. One of the things I did is I had Cursor run through and ask as it was like a focus group on the user interface, and this is what it came up with as being professional for like an institution to use. But we also have these more like kind of green. This is the amber. I've got green. Got cyan, which I kind of like this at first, but Blake said he didn't like it. Also made these like light modes if you're just psycho. But then my personal favorite is a Star Trek Next Generation user interface as well. So again, we can go back to the institution. We can do capital markets, summary, debt, equity conditions, multifamily cap rates, current rate environments, all of that. So you see here, some of my CoStar data is missing. So that's something I have to fix. Agency lending, cap rates. So I've loaded this with tons of cap rate surveys, as well as CoStar data, but it knows to discount. It knows to do this. It doesn't. It didn't. Although it was suspicious. But you see here it says the national multifamily is 5 to 5.5 institutional. Though CoStar shows inflated 5.5 to 6. Ignore their number. Midwest sitting 25 to 50 basis points. I spent some time to try to build some personality into the operator. It's got a backstory. The equity conditions goes through the REITs. So it's ask me one sensitivity on acquisition, IRRs at current financing costs, or map the distress inventory in specific markets. Sure. Yeah. So one of the things I did is I made about a dozen really deep research knowledge-based files on multifamily operations, acquisition strategy, capital markets, underwriting, asset management, property management, all of these things. And so it can access these different knowledge-based files and to get to just more specific references than the AI model is trained on everything, but it doesn't necessarily have really recent information, and also it doesn't have it necessarily like right in front of itself. And so this has a knowledge base of information saying this is what you need to really be things you need to reference more often. Okay, what did this thing do? Let me recover sensitivity analysis. This is just random property. No, this is in this cute. So some of the data I think is just a little bit old. What it's trained on, 75K a door. It's a little cute, but C-class steel. It's not that they don't exist. It's just 70% loan to value and a 5.5% agency permanent, going to have 5.8 exit cap 5.5. What? You're not gonna get away with that. Rent growth 3% annually, 5-year hold. Yeah, it doesn't look that good. Yeah, it didn't work out. So that's why I try to not have it do as much math. It does the probability analysis. It does a decent job, but lose some rent growth trends. I think it's still on Carmel 46032. No, you can, I believe, export. Now we can like clear our graphs. Did not work. So we can export things. Okay. I'm not saying this information isn't out there. I'm not saying that like some of this, if you just go into ChatGPT or Claude, you're not going to be able to pull a lot of this right away. But this is just specifically trained to like focus and analyze on multifamily, how you're supposed to look at deals, and then also how we look at deals. Yes, can you do any other? The 10-year Treasury's just been running this war. Back to TNG mode. So you can like drop deal information in if you want to run a calculator, and that's what it did here. I don't fully trust the calculator. I don't like that when they do the math. Don't trust it really. Even though, the AI is not doing the math. I built 2 different calculators, and I honestly don't trust either of them, and I'm probably going to remove them. Investment appeal. Sometimes these metrics that it look at that pipeline. I like these little graphs. Transaction volumes coming up. Hey, occupancy's coming up. Rent growth. That's good. And this is projection, I believe. Hamilton County overhang. This is the key risk that everyone's missing. Development remains concentrated in Hamilton County, where supply pressures may weigh on short-term performance, but it's also where the highest quality demand lives. Class A concessions in Carmel and Westfield are temporary. That demographic doesn't disappear. That's true. Natural contacts, rent growth across several markets. Well, sorry, this is submarkets through Indy. Because I've a bunch of real page data also, I believe. What this means for deals. Avoid the Hamilton County overhang. Too much Class A supply hitting 2025, 2026. Okay, check. Target Johnson County in southwest Indianapolis. Oh, you mean like the deal we just bought in Greenwood, Gladstone Crossing. Class B is the sweet spot. Less new competition, workforce housing demand intact. Basis matters more than pro forma. This market rewards conservative underwriting. Okay. The 2026-2027 setup. As the construction pipeline slows in 2026 and 2027, these units will be quickly absorbed. And rent growth is expected to resume. Supply-demand fundamentals should rebalance by mid-26 as deliveries taper off. I don't disagree. This is a stock picker's market disguised as a commodity play. What? The MSA averages hide massive submarket divergence. Hamilton County will struggle for 18 months and lead the recovery. Johnson County in the southwest never really got oversupplied. True. Facts. Want me to map the distress pipeline hitting the refinancing walls in 2026? Model specific submarket scenarios? The opportunities in the details, not the averages. Boom. Okay. Yeah. Yes. All of it. So it saves all these graphs over here so you can reference them while you're continuing to chat. That looks strange down there. You have this button here. It generates a brief for you. Where it's supposed to. Oh, I forgot. So yeah, we've got the map. Of course, we got our satellite. And we've got regular map, road map, dark map, and I think it's cool is the topo map. So you can see like parcels and stuff. The map is a little buggy, to be honest. I don't know why. So when you scroll, I'll work on that. Okay, distress. Oh my gosh, what have we got here? Give us. I guess I did say all of it. Where the opportunities are. 162 billion maturity wall reality. Oh my god, yeah, we've been talking about this for a long time. Okay, Indy specific. 2 to 2.4 billion multifamily loan maturities in 2026. No, that's too much. Maybe. Wow. I think they read our loan maturity report. I did not load it with that, though. I did not train it on that. They could have searched it on its own. Distress opportunity matrix. Okay, this is what I'm talking about. Johnson County, execution risk 4, IRR potential 16. IRR potential. Where are you coming up with that? Hamilton County, execution risk 3, IRR potential 18. Okay. So this is like value add stalled. Is it okay if you acquire a stalled value add deal? Yeah. Okay. We're talking strategy. Bridge with cap expiry. Okay. Yeah. So now I'm not sure if it's saying acquire like buy a deal that is on a bridge with the cap expiring or the terms expiring, or are they saying to acquire with a bridge loan? I think probably buy a deal that's on a bridge loan, saying that it's probably a mess. Maybe I'm wrong. Agency assumable. Yeah, low leverage, probably low leverage, but if it works, it works. Supply pressure, financing risk, fundamentals, opportunity score. Hamilton County still has the highest opportunity score. They're not wrong. It's got the highest supply pressure, but that's for a reason. Financing risk, I don't think that's the case. It's saying we should listen to our broker networks. That's definitely true. The Hamilton County paradox. Everyone's avoiding the oversupplied north suburbs, but that's where the biggest distressed opportunities live. Class A properties that penciled at $90K a door in 2021. I don't see. That's 90K a door. I mean, probably not in Hamilton County. They're hitting refinance walls at 65. Okay, yeah. See, I need to adjust the per door references. I think it's trained on slightly old data. I mean, that was 10 years. That was 10 years ago. Specific targets to track, bridge loans, CMBS, everything else is accurate. Financing the opportunity. Lenders appear committed to working collaboratively with borrowers rather than pursuing aggressive foreclosure strategies. Yeah. Model specific distress acquisition scenarios at different discount levels, or build a sourcing dashboard to track special service movements. Anyway, that's all we're going to look at today. It does have news feed also. Let's see if this works. But again, the final state of this is a analysis tool for like alongside like an analyst that is underwriting a deal, or for like somebody like me or chief investment officer who wants to like screen a deal. I guess the last thing I will show everyone, thank you for watching, is, let's take a second, but let me grab a deal. Let me drop in a deal. All right, this is for Solana at the crossing. This is the previous deal we did. Drop a PDF in. It's extracting the deal metrics. It's reading the file. Extracting deal metrics. And so this is all being powered, besides all the actual just the data feeds, with Claude Sonnet 4. Okay, so Solana, so it should instantly snap to the location, which it did, dropping in the units. Although it's supposed to be 389, not 384. I don't know. Still reviewing. Okay. Okay. Oh, sorry, those are headlines. Okay, here we go. Looking at our deck. Okay, it knows it's our deal. Let me pull the comp set. So it's got comp, Somerset Lakes, Nook 9, River Ridge, Alexander at the Crossing. There are more comps in this, but these aren't wrong either. You can rate from like the rent versus the subject, the color codes, the vintage. It tracks debt maturity. Okay. It flags red flags, missing occupancy. It's saying we don't state the current occupancy. It does state it's missing that. It's saying that we need some evidence. We do provide the evidence. Anyway, again, it's not supposed to go light on us. It calls out anything you should ask a question about. So, I can ask it, stress test these returns. What breaks first? Again, it is set to do a bunch of calculations. That's where it doesn't work that well. You can ask it about the area, you can about the deal, the structure, all that stuff. It can do some analysis. Actually, I'll stress test the returns, and actually the one thing that does work is that the Monte Carlo analysis is pretty cool on the deals, giving IRR outcomes, cash flow outcomes, probabilities. Yeah, see, this math isn't right. Like, this isn't wrong. Yeah, base case IRR 10%. That's not. It's not parsing correctly. And it's ripping it apart, but it's like it's a 10 IRR. So it thinks it's a 10 IRR. So it says you need to do a 15 to 20% basis reduction, pay $150K a door. Yeah. Let's see. I can do the Monte Carlo. See if it'll do it. Let me know which color you like. This is kind of cool. These are kind of like, old school, just classic. This is a little much for some folks, but I am partial to it. But this is just also just solid. Okay. So it's giving the ranges. Again, it's not using the right math to start with. So that's what I have to fix. Some of this is probably correct. But that's where it just does not work that well as a tool, is the actual like taking in like the deal. It's really good for kind of macro like market analysis. That part works. It will ingest a deal and take in some of the information well. Some decks I've found work better than others. Some decks are like perfect. But the math that it does is just not that accurate. So again, it can pull like market information really well. It can run the comps, all that stuff. Comps. Let's see what it pulls. Let's see. Okay. Nice scatter plot. wish it would indicate that this is the subject. Oh, we do have the atom data. I forgot we connected that. Sure. I have a couple of different APIs I need to still plug in. I've got a few others that I have working. And we're hoping to be able to plug real page APIs in here also. We're negotiating. We have to pay for frickin' real page APIs, but Class A stabilized 4.75 caps. That seems really low. That's honestly not too far off what people have been paying, though. This is actually pretty accurate. This seems going to seem really low to people, but this is definitely what people have been paying. So paying market price. Well, if you talk to the brokers, we actually set the market with Solana. You see, 7%. Yeah, no, if those returns were true, it would be the case. Okay. All right. Well, thanks for watching. More to come on some of our tools at a later date.